UWMC has been a significant part of this portfolio since the start of this value investing series. And lately, that has been changing. In fact, during March, I've sold 500 of my original 700 shares in UWMC. Why have I done so? Well, that is the purpose of this video. To explain why I've decided to ditch over 70% of my stock in UWMC and to explain what my plan is for the rest of my position. Now, before that, real quickly, welcome to another episode in my value investing model portfolio series, where I'm investing real money with a value investing mindset to build up a track record over time. Today is actually the 10th episode and UWMC is the star of this show. But before we talk about that, I first want to share all the transactions. And there are basically three we have to discuss. First up, we sold 400 shares of UWMC for varying prices, but the average is just shy of $5 per share. And in total, we got 1,800 euros for these transactions. We still do have 200 shares left, which equates to roughly 6% of the portfolio. More on my reasoning in just a bit. First, transaction number 2. We purchased an additional 25 shares of Clearfield for about $45 per share. Now, we got this position up to a grand total of 100 shares, which is pretty darn sick. And we're about 25% invested in this company. You might ask why? Why am I investing in this specific company for the specific price? And especially, why am I buying so heavily in Clearfield? Short synopsis is, it is a company growing at 25% on an earnings basis, while they are trading for a price-to-earnings ratio of less than 15. So basically, I believe I'm getting a phenomenal deal on this one. I believe I am paying a below average price for an above average business. And basically, I believe Clearfield is intrinsically worth $100 per share, while it's currently trading for $45 per share. Again, a phenomenal deal in my opinion, and that's basically the entire crux. If you want to find more out about Clearfield specifically, this is my deep dive video on the company. The link will be in the top right corner and in the description. Last transaction of this video, Base Resources. We purchased another 5,000 shares for slightly less than 20 Australian cents. And now with a total position of 35,000 shares, this company makes up a position of almost 30% in this portfolio. That is to say, we have gone pretty darn heavy into this specific company. Why? Well, I believe Base Resources is basically the perfect turnaround play. I believe the company is being valued as if they are completely unable to get any revenues and profits after the year 2024. That while in reality, the company is hard at work at trying to find more resources to yeet into their processing facility in Quale. If the company is able to find more resources, 2, 3 or even 5x is totally possible. On the other hand, if the company is unable to find any more resource to mine and process, most likely I'll probably not even lose that much. The company is just so darn cheap on the stock market. Again, I have done a full analysis video on Base Resources. The link will be in the top right corner and in the description. And this is how the current portfolio looks like. It's currently worth 16.4 thousand euros on the stock market. We're holding just shy of 2,000 euros in cash. And these are all of my current holdings. Consider yourself catched up on this portfolio. Now it's time for me to stop teasing you all and start talking about why I am selling UWMC. You see, when I originally started buying UWMC, it was around this area. And then the stock price dipped hard. And we bought the dip hard. All the way down to $3.3 per share right here. And I did that with this frame of reference in mind. I believe UWMC's intrinsic value is in the $6 range. I do need to emphasize, initially I thought it was in the $6 to $7 range, which, quick sidestep, is why we always have to ensure we get a margin of safety on our investments. Because I ensured a margin of safety, and even though I did change my valuation of UWMC over time to the downside, I do not regret buying this company. That is because the company was undeniably cheap when I started purchasing it, no matter how you look at it. That is your margin of safety. At the end of the day, it doesn't really matter if the company is cheap by 25% or cheap by 50%, as long as you don't buy things which are actually overvalued. And by always demanding a margin of safety, you ensure that you're always buying stuff that's cheap. You ensure you never mistakenly buy something that's actually in fact overvalued. So that is why I am always on the lookout for undeniably cheap stocks. Okay, so back to the UWMC story. I believe the company's true intrinsic value is in the $6 range. Now today the company is trading above $5 per share, which is really close to $6 per share. In essence, my risk of holding UWMC has increased because of the higher price. After all, my margin of safety has disappeared completely. At this valuation of $5 per share, I cannot make any mistakes on my valuation. So risk has increased, but also my potential return has decreased. After all, now from $5 to $6 is only a 20% increase. So risk has increased while potential return has decreased. Hence why we are selling UWMC. The thesis has played out and it's time to now look for better opportunities. By the way, we got about a 20 to 25% return compared to our cost basis on UWMC thus far, excluding the dividend which is coming next week. Of course, if and when I've exited the position completely, I will update you all on the entire profit and loss for this trade. Now, last topic we have to discuss, the comparison. Summarized, this portfolio got a 2.5% profit since the start of this series. A dollar cost average into an S&P 500 ETF would have resulted in only 0.5% of a profit. Therefore, my value investing portfolio is overperforming the S&P 500 by about 2%. We have earned 400 euros on this portfolio, while dollar cost average in S&P 500 only earned 90 euros over this period. So arguably, I'm doing 4 times as good as the S&P 500, or something like that. Now, that was all I want to share with you guys today. Keep your eyes open for the next installment of this series in 2 weeks' time. Now, time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.